Hello, Namaste, Happy Valentine's Day to all the viewers. Welcome back to my channel, 𝗧𝗏 Stock Analyst. So in today's video, I'll be discussing about a monster stock. That stock is listed in New York Stock Exchange. It's an American company. And you know my track record, whatever I have come out in the past, you can see all my videos. I have always been dead right about my analysis. So the stock without delay is EOG Resources Incorporated. EOG. It's listed in New York Stock Exchange and currently trading at 133 US dollar. Its market cap is $78.2 billion. It has debt of $5.3 billion and cash of also of around $5.3 billion. So basically it's a net zero debt company, it's debt free company. And so what is this EOG Resources? EOG Resources is a non-integrated independent crude oil and natural gas company. This company is engaged in exploration, development and marketing, production and marketing of crude oil, natural gas liquids and natural gas, mainly in the basins of United States of America and Trindad and Tobago, and also they have some few acres of such exploration region in China, in Sichuan and also in Oman. And they keep on selecting, they keep on bidding from time to time to any this geographical regions where they think that there can be a big resources of oil and gas available. So basically this main resources are, as I told you, that offshores is Trinidad Tobago and USA. So what is the so great about that company, which you will ask that why one should? So as I told you that you have to look into that company which is reach into the assets. So these are reach into the real assets, resources. So basically these are the real resources, right? Crude oil, natural gas and these areas of exploration and successful. It's not only that some companies, they are holding all these millions of acres of land of these so-called basins, but hardly they are producing. They are just engaged in the exploration and till now they have not struck that gold or what you call that real rich geological resource where it can be a production can be so economical that it makes sense to that say that this discovery is really producing asset. So what are the main part or what you call the investment rationale for the company which investors should look at? So the utmost important is that hurdle rate of investment. So they have very strict management theory about that investment hurdle rate should be more than 60%, with the average base crude oil price assuming at $40 per barrel and natural gas at $2.5 per MMBtu. So if you that this is the base price, even if you assuming this base price, so they will invest or the company will invest into that region or that area of that wells where they believe that their cost of production of that oil will not exceed $16. So that hurdle rate becomes 60%. So 60% a hurdle rate of investment. This is so nothing less than 60% of what you call gross margin they will be investing into. That is one. It makes very cash guzzling company, means cash it can keep on producing. Then it's very strict about this. So they will not be investing into some just for the sake of that, okay, where that investment hurdle rate is say 30%. So what do you call it? Say that your production rate can be say $30 or say $25. So they will not be investing. So what is the rationale behind is that even in the worst case scenario, if the oil comes down to $40 like it happened in 2020 post COVID lockdowns in the world crash, even then this company will still be making approximately 60% gross margin, because their cost of production of oil will not be more than $16, and they are targeting it to reduce it further, so that in some of the new areas which now they are trying to develop in 𝗬𝗏𝗏 basin is where this year in 2023 they will be drilling some 20 new, they have to keep on drilling because some of the old wells that the resources are already exhausted, so they will keep on finding new resources and new drilling development. That's how this oil and particularly that resource companies work. So they have to keep on adding assets. That is where they have to keep on investing. So that the guidance is that they will be adding 20 new drilling wells will be drilled in 𝗬𝗏𝗏 basin, which is, and they are targeting that those wells will have a cost of production per barrel approximately around $5. And then you add all other things, it will be more than $5, but that exact drilling cost should not be more than $5 per barrel of oil equivalent. That is what they are targeting. So that is also makes it a very, growth company. Third, and which is also very important for the investors, is cash flow and distribution of the free cash flow, means dividends. So they have mandated that 60% of annual free cash flow will be returned to the shareholders. This is what they have mandated in their management statement and management commitment. So it will continue to give high dividend and special dividends. So as the cash flow increases, 60% of the cash flow, annual free cash flow will be returned to shareholders. So you try to find out how many companies you can find out in the world who have pledged like this, at 60%. So because they are very disciplined about investment, they will not just do investment just for the sake of, this is some big area with rich resources. If they find that, okay, that area is really rich in resources and everything, but that resources or the oil find can be very, very below the, very down geologically surface, where the drilling has to be very deep and very horizontal, where the cost of production can increase. That is what they will not, even though it may look very rich, but the discipline about investment, capital investment they are maintaining that. So now assuming that even if now it is at $80 this year, we have seen till now, I believe that it is going to be even increase more, because the way the Ukraine-Russia war is shaping up, you are going to see blitzkrieg in this now next 2 months. Heavy bombardments and fighting from Russian side. They will just finish this before the March end. And that is where you will see, and with that earthquake, the sad earthquake and the very unfortunate earthquake happened in this Turkey, Syria, and thousands of people have lost their lives, very unfortunate. So with this kind of also, where that supply disruption will be there, and demand will anyway, so all this war doesn't work on the water, right? Most of these tanks, flights, planes, fighter jets, everything works on some kind of fuel. So that way also the consumption or the demand will be there, and with this kind of earthquake, unfortunate, the supply disruption will be there. Then in the Middle East, you know that Iran, Israel, always that pot boiler is there. So that will also keep this boiling pot. And Russia has recently announced that they are cutting 500,000 barrels per day of production in response to that European Union's that price cap and not buying. So you are going to see that pressure on the price of oil will continue to be there in 2023, this year also. So we are going to see that price can go above $80 but not come below $80. So even if you see that price from here, some $80 becomes say $88 or $90 in average. So this is around 12% of increase, and 12% increase with the 20 new wells and the production. So I believe that you can easily see the next year's PAT, profit for this company, approximate, we can say the projected can be around $10 billion. And even if you say that EBITDA, so that can be around $15 billion. So just giving a 10 times P, because if you say that the company has grown at say more than 10-15%, but even if you continue, because it's a commodity in a price volatility, so even continue to give 10 times P, because next year also we see that it will grow by 12%. Just if the price goes up, it can grow even more than 25% in the profitability. So even assuming this, that only it grows by say 15%, you can see $17 of EPS on a very conservative basis. So even without anything, you can see that price can reach up to $175. And if the oil pushes more, crude oil goes up more than $85 or $90, then you can see that even this stock can go to $200 also. So this is a very interesting monster stock idea which I wanted to share with you. And before, a request to all of you, if you like this video, you please put a like. Don't be shy. At least this gives me encouragement and inspiration to come out with new unique ideas. And also please subscribe to my channel. It's free. There is nothing charged. Visit my website for knowing about my paid services for consultancy, www.steelanalyst.com. Till then, next time with some other ideas. Ciao from Neeraj.